Big Mike, welcome to the Elev8 Event Series Podcast. Thank you so much for coming on. We're going to learn all about your business today. You're based out of New York, big time real estate investor, syndicate, all the above. And I can't wait to learn more about your business, more about you. And just thank you so much for coming on, brother.
It's a true pleasure and a privilege. Really love your energy. And you're so awesome, and I appreciate you. I'm happy to be here.
Well, I appreciate you. So let's talk real quick. So who are you? Who is Big Mike? What's the big, we got to do a podcast recently. What's the Big Mike podcast about? Who are you?
Sure. So originally, I don't know if you remember James Bond movies, old movies. There was a movie called From Russia with Love. I actually come from Moldova. Moldova is a Republic of the former Soviet Union. I left and was still Soviet Union, 1989. So I come from Moldova with love, just like James Bond. And for clarity, because of whole political situation with Russia, I differentiate. I'm from Moldova with love, not from Russia with love. But my original native tongue is Russian. I grew up speaking Russian as my first language. I came to the United States in 89. I'm a U.S. citizen. I'm a U.S. patriot. I live in New York City. I settled because of the family. And I live with 4 monkeys and a cat. Well, my lovely wife, 4 kids, and I actually have a cat. So that's kind of on a personal level. But on a business level, real estate is my passion. I'm actually a mathematician by education. I'm a chess player for whatever it's worth. I'm a chess master. I grew up playing chess and doing mathematics, kind of these, a little bit of a geek type of a fellow. But then I discovered real estate. I spent 15 years in technology world. I had a career in technology, really good one, successful, enjoyed that. But we all wake up one day and realize there's something we're passionate about. You're passionate about music and events. I'm passionate about real estate. So in 2009, I went real estate full time and never looked back. And it's been a fun journey in real estate investing. And I do run a few funds. We have one-off deals called syndications. And I have a podcast with a cheesy name, Big Mike Fund Podcast. And you can find me on bigmikefund.com. And if you misspell it and you just go to bigmikefund.com, I promise it's not a kinky site.
Well, we're glad. Thanks for the clarification, first and foremost. Appreciate that. And all right, I know most people are going to ask you all these real estate questions, which we will get to, but I have to ask you about the monkeys. What kind of monkeys?
Well, human monkeys, right? I have people. I have 4 children. That's what they call them. 4 monkeys and a cat. 4 human monkeys.
4 monkeys, and he's from Russia and a chess player. Okay, so you have 4 kids. 4 kids. Okay. But I just wanted to clarify because
human monkeys, just to be very clear, kids, human monkeys. But you know how kids are. They can be like monkeys.
I'm just learning. I have my now 4-month-old daughter, so she's not currently a monkey. She's just a beautiful little just ball of joy. But okay, so 4 kids, live with the wife, love real estate. And so is the business, Big Mike podcast, that's just to grow and network
and service. It's a service for the community. I don't make any money on this. It's actually an expense. We make money by putting together real estate deals that are what I call them great deals, deep value deals. And investors, our partners, we basically marry money and opportunity. That's the best way to describe. We basically have a ton of investors who come in and they know us as folks with deep connections, deep networks. We find great deals, great strategies, and then we kind of marry them into an investment project known as syndication.
Perfect. So appreciate the clarification on that. I know we talked a little bit. What's your buy box? What are your investors looking to buy right now? What kind of properties are you investing in? Is it residential and commercial, industrial? What's your buy box?
So buy box changes over time. We have multiple strategies. Just to be very clear, today we see 3 really interesting opportunities, just high level, and we're focused on primarily 2 of them. So number 1 is the easiest, best, is the deep value buy. So what the hell is a deep value buy? Well, the market, as you know, reset. As the Fed hiked interest rates fast and furious and kept them higher for longer, the market for commercial real estate definitely dislocated. So we are not doing anything in resi other than some hard money loans from time to time. So we are a lender from time to time. But that's It's one of the opportunities that I mentioned is a private credit. You can be a lender, be relatively conservative and get some yield and just keep, as safe as possible. But the better opportunities exist in essentially two other buckets. The main bucket is the deep value. So I'll give you an example. We did a deal earlier in 2025. It's a multifamily assets, large investment, 1,046 doors near Ann Arbor, Michigan. Very deep value. It was bought for $79,000 a door, a great location. It's Midwest, so a lot more affordable. And it's basically, we bought $79,000 a door while it used to trade at $125 a door in 2022. So it's about 35% off the peak. And you're buying at $79,000 a door before any improvements. And there's a lot of upside in the deal. And the as-is rents at $1,150 a door. So you can do the math. The basic rules of the math kicks in when you're buying $79,000 a door, you have $1,150 a door as is rent, and then you are doing energy efficient improvements. We're replacing old ceramic heaters with a new HVAC, energy efficient, utility company reimbursements, significant savings on utility bills, just traditional innovations of the units, and you're pushing rents from $1,150 to call it $1,450. Over a period of 4 or 5 years, but you bought at $79,000 a door, and we're renovating at about total investment about $25,000 a door. So the math is so powerful, and what's really do I look at deep value? I'll tell you a real simple metric. Most people don't look at it today; they don't think about it, but it's critical. This is like real estate 101. What is the capitalization rate? And a cap rate, for those who don't know, who are not experts in the field, it's basically if you buy a property and you get income on a property, what is your unlevered without mortgage rate of return, right? So if you have a 9% cap rate, means you're making 9% return on your invested capital before taking a mortgage. Now, and then you borrow with a mortgage. And on that deal, we're borrowing at 7%. So we bought at 9% cap rate, you're getting 9% yield on your cost, and you're borrowing at 7%. That delta is at 2%. Positive leverage. And today, people buy, and they used to buy a negative leverage, but 2% positive leverage is a huge margin of safety. It's an indication of a very deep buy because in the worst case scenario, you still have a good defensive cash flow. So that's one of the examples of a very deep buy. And then you look at relative purchase price versus reconstruction cost. I know you're big into new construction. So new construction is wonderful, right? That's why people compare what is reconstruction cost. What if you were to build that asset fresh? When you're buying at $79,000 a door and it costs you close to $200,000 to build new, it's a massive discount. You're getting phenomenal deal. Like this is what I consider deep value buy. That's what we're looking for today. We have another deal we're working on right now. We're buying at 9.25 cap rate and financing it at 6.5 fixed rate debt at only 58% leverage. 58% leverage is very conservative. It's very defensive, right? You have a 2.75% spread between 9.25 cap on purchase versus 6.5 cost of mortgage rate. These are pretty basic. It's almost like people are going to say, this is so boring. I don't understand this stuff. Well, this is math, right? Basic math. And these numbers speak. And when you look at this stuff, of course, there has to be many other characteristics, location, kind of what's the value add strategy, what are the long-term economics. The new deal I just mentioned is different. The first deal I mentioned was multifamily, right? Multifamily is a traditional, classic, deeply discounted opportunity. What we are buying is an open-air shopping, the second deal. So open-air shopping, you're going to tell me, who goes shopping? What is this? Amazon should eat their lunch. But this has been the trend for the last 15, 20 years. Everybody was afraid Amazon is going to eat their lunch, e-commerce. In reality, there's been no new supply. Very few new projects came. As a result, the demand has actually grown. Rental rates have gone up. And what's really fascinating, when you do that type of a property, you're leasing to Starbucks, you're leasing to Cheesecake Factory, you're leasing to high credit quality tenants for long term. They're very predictable. That's one way to put it. I'm going to shut up and take a step back and let you ask more questions. I hope.
No. I loved it. I love to hear your mind work. I love to really listen to an expert talk about the real estate market right now, especially in these deep discount buys. I think that's probably a very niche space that most people aren't into. And then I can also hear your chess master brain go to work with the defensive mindset, the comments there too. So I definitely love to hear your mind work. So we talked about opportunities that you see. what are the biggest challenges right now that you're facing in your business?
So I think it's not just me, it's the entire ecosystem. As the Fed hiked interest rates, liquidity dried up. This is true for everyone and everywhere in real estate, residential, commercial. So liquidity dried up because velocity of money stalled. So to finance new deals, new opportunities, you need to raise fresh capital. Most of the financing in the past came from cycling of the money. People would sell one deal and roll the money into the next deal, and that stalled. So getting fresh capital is more difficult now than it was a few years ago. And we're also dealing with what is known as the recency bias. A lot of investors have done incredibly well in other strategies. So commercial real estate, last few years have not been, let's just call it, most exciting time because the market kind of shifted with interest rates spiking. Go look at stocks. Go look at crypto, Bitcoin. I have so many friends made fortunes in that stuff, and you talk to them about real estate and how great these deals are, how asymmetric return, risk-adjusted opportunities these are, phenomenal buys. And they tell me, we're in a bull run in Bitcoin, the stock market, Magnificent Seven, these great stocks are doing well. All the AI is moving us it's a revolution. And I respect that. So these folks don't want to do anything. They're very complacent. So complacency and lack of volatility in public markets is almost making things temporarily less attractive in these deep value buys. You have to have a contrarian hat, right? If you have a contrarian hat on, you can really understand and appreciate now is the time to actually diversify out of what has done really well into something that's deeply discounted and presents better opportunity on a risk-adjusted basis. It sounds very mathematical, very chess master-like, but that's the truth. That's the truth about thinking. When you invest, when you look at Warren Buffett's of the world and these long-term gurus, they made most of the money, most of their fortunes by deploying a ton of capital when markets have reset or were dislocated, where there was a lot of fear on the streets. So now the commercial real estate opportunities are great. Raising capital is the biggest challenge.
So how, I guess, piggyback on that question, like how are you finding people to essentially, are your clients investors or are your clients people looking to buy or sell properties?
So as I mentioned previously, what we do is we act as capital partners to a large investors who find operators, sponsors who find deals. So the way we work a little different from some other companies who are direct operators. So direct operators, they raise capital for their own projects. We basically have both. We kind of a matchmaker between money and opportunity. Opportunity, we find great projects with great sponsors. The other jockey ahead of the horse. We vet them first. We only work with folks who we know or worked in the past many deals. Like, give you an example, the deal we're doing right now in the open air shopping, this is our 8th deal with them, and 7 deals have done really well. So we know these, what I call them, very strong vertically integrated sponsors who find these phenomenal deals. We obviously underwrite them, visit this property, spend time getting conviction that these are great deals. And when we love them, we say, okay, we love the deal. We want to bring you a big check into the deal. And we negotiate the best terms we can for our investors. And then that gives them high confidence. If they're looking to raise capital, I'll give you an example, a multifamily deal early in the year. The sponsor needed to raise $14 million. He came to us, said, can you guys raise me $9 million? And we said, yeah. I mean, you and your friends put up the remaining $5 million, we'll raise you $9 million. So we basically bring large check, one check, not 5 checks, not 20 checks, one check to them. So to them, it's very high confidence performance to get the capital. For that, they're willing to give us much improved terms. To them, it's confidence, as I said, of execution. On the other side of the spectrum, we work with investors, limited partners, basically passive investors who are looking for great opportunities, and they don't have the time, the energy, the capability to do comprehensive due diligence, and they reach out to us and say, listen, you guys know your stuff, you're experts, what kind of deals do you have? And we basically marry them. When we have a deal, we have investors who are looking for deep value with a cash flow from day one, strong upside return, tax benefits, big, beautiful bill, renewed bonus depreciation. Wonderful, right? Now we can get them deals with outsized depreciation. Some folks looking for, basically, some people are purely income, some people are income and growth, and there's some people who just don't even care about income, they want growth. But today, most of our focus has been income and growth because we can get into these deep value buy deals. So that's basically what we do. We just marry money and opportunity. Does this make sense?
How are you finding these investors? How do you, is it referrals? Is it social media? Is it events? How are you finding,
So it's a journey, right? There's not one strategy fits all. Most of our investors are historic relationships, right? We've built these relationships with folks over time, and we have a ton of referrals. So we work actually with folks with their own communities, micro communities, groups, who now for raising, give you example, we're raising $9 million for the deal of $10 million. We have conversations with folks who have community. Well, I have people who want to give you $1 million, $1.5 million in the form of, 10 guys, $150,000 checks, right? So we absolutely will work with direct folks who know us, want to work with us directly. We will work with folks who have their own communities. We are part of mastermind groups where folks get together and they're looking to invest, and they're looking for collective due diligence, sort of. We also obviously continue to provide educational thought leadership podcast, right? We're not trying to sell anyone anything. We basically just educating. We're spending time understanding folks' needs. We don't provide any advice. People make their own decisions. We basically bring great projects, and then folks look at them and they make a decision. Is this the right thing for their circumstances, their risk tolerance, their goals, their time horizon, etc. So it's a process, and some of it is social media, some of it is relational, conferences, mastermind groups, events. I travel to a lot of these events. You put on events. I sometimes get exhausted from these travels. The best connections we make is human connections at events. So I will give you all the credit for your events because this is where you connect personally as much as you can, human connections. But I wish I could duplicate myself. I haven't figured that out yet. So I do the best I can, and then the rest, talk to folks, on Zoom and other platforms.
So it is the Elev8 Event Series Podcast. I'm glad we got to this event part. So what kind of events are you going to? How do you find them? Do you have a recent one in memory that really stuck out, that you met a lot of people at? Like, walk me through what kind of events you're currently
So it varies, right? Originally we were introduced through a community of dentist freedom founders. We have relationships with other groups, freedom warriors. We have relationships with other mastermind groups that are, they range. For example, I've been in a mastermind community of real estate professionals since 2012 called the Collective Genius. I've been in this group for a long time. I'm one of the super veterans. And many of these guys and girls invest with us. And what do we need? I basically try to understand their deep needs. Because the real estate professionals, they want deals with heavy depreciation. So they really like when they invest $100,000 and then they get $200,000 first year loss through bonus depreciation. Well, how does that happen? Well, it's through a deal structure. So another part of what we do, we structure some of our deals with the preferred and common equity. So most, just for the education purposes, most real estate deals are structured with a mortgage, right, lender, and equity. This is the normal, typical, common structure. And when that happens, all the depreciation goes to equity, and the mortgage lender just gets paid the interest, and they don't get any tax benefits. Imagine you take the equity piece and you break it into two parts, one called preferred equity, the other one called common equity. Preferred equity can act, and look like secondary debt, and it gets its yield, it gets seniority of payments, seniority of return of capital, and then the common equity gets all the tax benefits. So we do some of the structuring where heavy depreciation flows to common equity because these folks take a little more risk, and they also get paid after preferred equity. So these structures can actually be a huge benefit for certain communities. As I mentioned, Collective Genius, a lot of these folks, these heavy depreciation deals, we do that. There's also a whole another trend, this is I've seen, really, really interesting trend. A lot of people bought turnkey properties. I'm sure you're aware of what these things are. So many professionals own portfolios of rentals. Some people call them turnkey, some people call them rentals. Just a lot of single-family houses, but many. Sometimes they're dispersed in many cities. And it's a beast to manage. I've had people who own hundreds of houses reach out to me and say, Mike, I want to sell and I want to invest with you for a simple reason. I want my life back. Managing these portfolios is a lot of work.
Yeah.
And there's upkeep, maintenance, and the tenants move out and they damage the property. So we had plenty of these wonderful folks who literally selling 1031, exchanging, or just selling outright and then rolling proceeds into a deal with heavy depreciation to offset that tax liability from the gains on sale of these properties, but be more passive, enjoy their life so that they can have more time on their hands. And what's really crazy, some of these deals we're getting into, the cash flow from these deals is better than owning these properties outright. This is how crazy it is, because the maintenance, upkeep, and all that overhead often consumes what a deal looks like. Yeah, I get 10% yield, but after all the repairs and everything else, you only get 5%. Well, you can invest in one of our deals and get a yield meaningfully better than that from the get-go and still get tax benefits and get the upside. Back to the questions, what communities? There are multiple communities. We are exploring a number of shows. I give you an example now. We're looking at the money show. We've never done it before, but we're looking at this. Somebody said it's a great thing. So we're exploring. It's not in marketing, it's a world of exploration. Maybe it'll work, maybe it won't. We've been to a number of other conferences, industry events, and it's not a one thing always works. It's an ongoing type of relationship building. And as I mentioned, we work with partners. If we can't raise capital directly, we work with one of our close friends and partners who raises significant capital for our deals. She's the number one influencer in the Chinese American community in the United States. All her stuff is marketed in Chinese. So there's affinity groups, there's all kinds of things. So I had a career in technology world. So I am literally reconnecting with my old boss and old friends who I used to, be friends with and work with. These folks need opportunity to diversify too. So it's an ongoing process. I wish I could tell you one thing that works all the time. I think it's just a multi-dimensional type of conversations. And I'll tell you the number one strategy of all strategies. This is the best by far, beats everything else. So existing investors, they've done well with you. And I've had these calls, and then they tell me, hey, I golf with my buddies. For 4 hours, you play with your friends. What do you guys talk about? I'm just using it as an example. Well, we'll talk about everything else. What about, do you ever tell them what you invest in? Sure. So referrals by far, but not even power referrals. You're not asking them to do it. Listen, you and I know each other. We have a great relationship. All you have to do is mention, hey, I invested with Big Mike. That's it. These folks will often ask, who's Big Mike? What do you invest in? So curiosity sometimes gets you. So I don't know if I'm giving you useful feedback. It's just more of a warm referrals, get the heck out of all other marketing. So asking for referrals softly, writing a book. I'm writing a new book. Well, actually, the book is written now. We're just getting edited, and hopefully it'll be out soon. So stay tuned. And it should be a really, really cool book. And what's really fascinating is that the first editor of the book is going to be AI.
Yes, we don't have time to get into the AI subject today, but AI is really changing the game. So many great insights that you've given us so far throughout this podcast. So I really appreciate you coming on. Now, this is the Elev8 Event Series Podcast. So I do this with everybody. It's not weird. You have to do it. I need you to just close your eyes for 30 to 60 seconds and picture Big Mike's dream event. What are we doing? Where are we going? What does it look like? Who's invited? What is your dream event? If you were going to be hosting your own dream event, what would it be?
I haven't thought about hosting events. So I've attended a lot of events, and this is your territory, right? So I would say that just from my own personal observations going to the events that I really enjoyed versus the events that are for stiffs. I'm a stiff. I am a geek, right? So there are events where they're too formal, too business-like. And I'm not saying they're bad events at all. I'm just saying that these are not necessarily the events where you can actually mix some fun and business. The better events are where you're having fun, right? So that's the best way to think about this. If you can do business and fun all at the same time, enjoy your time, then it's a multiplication factor. That's why when you mention your events and how you put on them, and you really bring enough entertainment, you bring enough kind of fun activities, at the same time you get the business element. I think that those are the best events. So I think I am just kind of alluding to your events to a degree. I haven't been to one of your events. I gotta come there. I'm sure they're super fun.
I'm thinking, man, Big Mike's, we're having a chess tournament. we're gonna go all out for the big mic. We're gonna do a podcast on site, probably some big real estate deals, talking about some big real estate deals at some point. But I think we could really do a big one for Big Mike's event. But thank you so much for coming on. Again, can you plug the podcast? Where can they find the podcast at?
It's the same cheesy thing, bigmikefund.com. It's an entry point. We have a corporate site, but it's just easy to remember. I am 6'4". I'm a big guy, right? bigmikefund.com. And if you misspell it, go to bigmikefund.com. You're not going to find anything that,
bigmikefund.com. Big Mike, man, we learned so much about real estate today. Thank you so much for coming on, brother. And looking forward to building a great relationship with you.
Likewise, Harrison. Thank you kindly.
Thank you. Appreciate it.
Thank you.